Credit card holders should check your limit. If you're counting on your available credit to bridge your bank account during income loss, you may find you've been left with very little. Consumer reporter Steve Noviello has some COVID-19 cuts.
My guest today, Ted Rossman, who is industry analyst with creditcards.com. We appreciate you being here today.
Thanks for having me.
This is a tough time for folks. A lot of people are turning to their credit cards because they have no more income. But a lot of folks, and we've been actually contacted by some of our viewers who say they were in for a rude awakening when it came to their credit limit.
Yes, I've been hearing a lot about this as well. We're starting to see a number of credit card companies slashing credit limits and sometimes even canceling cards entirely without warning. Unfortunately for consumers, it's coming at the worst possible time, as a lot of people rely on their cards to try to make ends meet.
So when we talk about this, is there a particular segment of the population that's being more targeted than not?
What we saw during the financial crisis was that 60% of subprime customers, people with lower credit scores, had a card limit cut or a card canceled unexpectedly. Back then, it was 20% for prime customers. So it happens to everybody, but it is more likely if you have a lower credit score. Dormant cards are often the first to be canceled. So if you have one sitting in a drawer or the bottom of your wallet, you might want to give that a test run here, make a purchase, pay it off right away. That could keep it active.
It's interesting you mentioned that because one of the stories that comes to mind that one of our viewers shared with us was he's a business guy. He owns car dealerships. His credit score is just fine, but he's got that backup business card that just in case he likes to keep it on hand, never uses it. So his utilization ratio is great. And now all of a sudden, American Express cut his tens of thousands of dollar limit to just, a very little bit because he wasn't using it at all.
Yeah, that's a tough one. So that will hurt one's credit score. I've been hearing a lot about business cards being canceled too, because we know so many businesses are under pressure. All this comes back to risk management, and that these companies are worried they might not get paid back.
Let's walk through the steps here for folks. So first up, you should absolutely check on all of your credit cards, regardless of whether or not you use them, right?
Yes, I think it's a good idea to use all of your cards once in a while. Could be a small purchase, pay it off right away. A lot of times these companies just look through their computers and it's kind of a yes or no. Was this card used in the last 6 months? That's often one of the first ways they think about canceling.
I'll tell you what, I know for me, I have a card like that and I've had it forever and I don't want to close it because I've got a great history of on-time payments for, 15, 20 years now. And it's got a lot of available credit. So I don't want to close it because my utilization ratio would go down. So what I do is I think it's my Sirius satellite membership. Every month gets automatically billed to it and then automatically paid through my bank. So even though I'm not doing anything, it cycles through that purchase and payment every month.
That's a great idea. And a related tip too, if somebody has a card that they're not using and they're not getting value from and they're paying an annual fee, you can do what's called a product change. Ask the company to switch you to another one of their cards that doesn't charge an annual fee, but you can keep the credit line, you can keep all the good stuff and just lose the fee. That too will help your credit score.
What does this do to offers? So I know that in the past when we've talked, sometimes when we discuss, okay, how do I consolidate my debt? And one of the ways that we do that is with a 0% introductory offer or a balance transfer offer. Are those opportunities going to be cut for consumers?
They're in much shorter supply these days. Banks are so nervous about how we've gone from a super low unemployment rate to unfortunately a very high one, almost overnight. And they're very worried about getting paid back. So they've really clamped down on new offers. And even for existing ones, they are tightening. One way that you might be able to get a 0% promotion through a backdoor is on one of your existing cards. You might be able to either already qualify for one. There's also the fact that everything's negotiable. So you could definitely ask your existing card issuer, maybe even say, hey, I saw this online or I saw this in the mail from another company. Can you match it? That's going to be lower risk than doing a fresh application.
For the folks who are tuning in who say, you know what, this happened to me, I was a good customer, they cut my limit, and now I'm going to say, forget you, I'm closing the account. That's not such a good idea.
Typically, closing an account will hurt your credit score because of credit utilization. So how much credit you're using divided by your total credit limit. Ideally, you want to keep that ratio below 30%. So in theory, as long as your spending is the same, having more available credit is generally a good thing.
And of course, communication is key. The bank wants to hear from you, especially if you need some sort of special arrangement. Ted Rossman from creditcards.com. We appreciate your time.